Equifax commercial credit reports are very important. As a matter of fact, this is the #1 type of commercial credit report that's used by lenders. So if you want to get money like loans and credit lines, especially from traditional banks, you need to know what they're looking at on your Equifax business credit report. And that's exactly what we're going to talk about today. I'm going to teach you everything you need to know to navigate your Equifax commercial credit report. We're going to talk about how to access credit monitoring. We're going to talk about credit scores that you need to know about, how the scores are calculated. You are going to leave this training with complete control of your Equifax commercial credit report. And that means you can have the profile and scores you want that will help you get the most money at the best terms, especially when it comes to loans and credit lines. We got a lot to cover, so let's dive in. So when we're talking about today is not consumer credit. We're not talking about how to read and navigate a consumer Equifax credit report. I'm not a consumer credit dude, even though I've written one of the best-selling books on that many years ago. Been out of that space for quite some time. Today we are talking about business credit. We're talking about credit that's in the business name, that's linked to the business's EIN and not linked to your personal social. We're talking about developing credit that doesn't require a personal guarantee. It doesn't require a personal credit check. It's basically a way for your business to fund itself. And business credit quality is the key to determine how much money you're going to get when it comes to loans and credit lines, what kind of rates and terms you're going to pay, as well as whether you get approved or denied. So there's 3 major credit reporting agencies in the world when it comes to commercial credit. There's Dun & Bradstreet, who's by far the biggest. They have over 220 million records on file of businesses. Then we look at Experian, and Experian is the second business, and they're biggest. They have about 27 million records on file. Then we look at Equifax, and they are a fraction of that. They are way smaller, the smallest by far in the commercial credit reporting agencies. And then we also have some other players, Credit Safe, who's been really popular in the UK and is now making a presence here in the United States. And then we have FICO SBSS, which is a score that's used by traditional banks to primarily for SBA loans. Now, FICO SBSS is used for other purposes and by other institutions as well, but this is where we're most familiar with FICO SBSS. You have to have a score that's acceptable there to ever qualify for an SBA loan through a traditional bank. And today we're going to talk about Equifax. We're going to dive in and decode everything you need to know about Equifax Commercial, your Equifax Commercial credit reports, how to access them, how to monitor them, credit scores, everything to do with Equifax Commercial. Now, JGG Commercial says, why does my Smart Business revolving account with Capital One not show a NAV for my business Equifax, but it does show when I pulled my business report directly from Equifax? Well, look, here's the reality. NAV has an arrangement with Equifax, DMB, and Experian. And in my opinion, I don't know necessarily if the bureaus like Equifax, Experian, and DMB are really giving up-to-date information to NAV in all cases. We see this happen quite a bit, that we see stuff that appears on your commercial credit reports, but not on NAV. There's a lag between what shows there and the data actually getting sent to NAV. So there's just a lag there between data coming from the bureaus to NAV, but it's better off to use NAV at $27, $30 a month than it is to pay each one of these bureaus $250 a month. So you kind of have to determine if you're okay with that lag, JGG Commercial, or you want to actually pay considerably more and not have the lag. Some things to consider. Liddy says, good morning. Thank you for all this powerful information. I really appreciate Credit Suite's the best. Thank you very much. I appreciate that. That's awesome. Okay, so the company gets its data when we talk about Equifax from a data sharing agreement with the Small Business Financial Exchange. So when we look at the Small Business Financial Exchange, this is a third-party data aggregator that you need to know about, because what happens is they openly share all banks' information. So let's say Chase, Wells Fargo, right? Chase and Wells Fargo are both members of the SBFE. As a matter of fact, every one of the major credit card issuers is all members of the SBFE. So whenever you pay Wells Fargo, you apply to Wells Fargo, all the information you put on an application, everything to do with your payment history gets shared through this organization to other lenders. That's what the SBFE is. And so they get their information from there. They're what we call a vendor. Equifax, Experian, Dun & Bradstreet, and LexisNexis are the only vendors of SBFE that can take data from this third-party data aggregator and show it to us as entrepreneurs. So they are a vendor with SBFE. So you see some data came from this, which all comes from the big banks. Okay, net 30 type industry trade credit information, basically who's reporting payments to them. 97% of vendors that issue you credit will give you credit. So if I go down to my local lumber store and they give me credit line for 10 grand, 97% of that kind of credit being issued doesn't report to a credit reporting agency. But of the credit that does report, they have those payments. So that's calculated on the reports and calculated into scores. And from a wide variety of suppliers that provide products and services. So a lot of suppliers report to them as well. Okay, Equifax combines financial data with industry trade credit data, and they add in utility and telephone data they have, public record information, bankruptcies, judgments, tax liens. A lot of that even comes from LexisNexis as well. So all of this stuff, the things that you're going to see on your Equifax report and calculated into your score. And then they also have company identifying information. So this has your business name, it has your address and telephone number, and it also includes your Equifax ID as well. And an Equifax ID is how Equifax basically tells your business from other businesses. Each one of the reporting agencies has this. We're familiar with the DUNS number from Dun & Bradstreet. That's used worldwide to identify businesses in their database. Then Experian has what's called a BIN number, or a business identification number. And Equifax has their Equifax ID. And the Equifax ID is just how they differentiate your business from other businesses. So that's kind of what you can expect to see on a commercial credit report. It's also very important that this information is kept up to date. So most people don't think that when you change your address or phone number for your business, you need to contact the bureaus. You do need to, because if you don't, you apply for a loan and say, this is my address, and they pull Equifax and they see another address. Well, then there's conflicting information, and a lender actually perceives that as fraud, a fraudulent application. If you don't even know your address, well, then it's probably not a legit application. But the reality is that your address on the application is right. Your address with Equifax is wrong. You got to fix that. So you got to make sure the credit bureaus have all your up-to-date information. It's very important. Now, the credit risk score is the main credit score used by when it comes to classifying risk for businesses from Equifax. Runs from 101 to 902. Higher numbers are better. So the higher score you can get, the better. And the section also shows key factors into the score. Okay, and the key factors are positives and negatives about your business, such as how old your oldest account is, whether you have any charge-offs, the size of your business. So these kind of things will calculate in there. As a matter of fact, when they don't have financial data like tax returns, the credit bureaus in the commercial world tend to rely on the size of your business to determine your financial health. So that means if you're a startup business, less than 5 employees, less than 10 employees, it could really ding scores like credit risk score if you don't have other factors like financial data that show that you're lower risk. So the credit utilization section shows your utilization of basically a pie chart, and it graphically shows which percent of your available credit lines you're using. It also has identifying labels to show how much each percentage truly is, and it's only for your financial accounts. So they are going to look at utilization on financial accounts, and that is going to be shown in graph format on a real Equifax credit report, not as much something you'll see on NAV type credit reports. Then we've got a payment index, and this is the next score that they offer. It ranges from 0 to 100. Higher scores are better. It shows an industry median. So this is very important because I talk a lot on here about NAICS codes. And NAICS codes, or knowing your industry code, is very important for you. And the reason that that's so important is that the credit bureaus all categorize you based on your industry and compare. They have what's called comparison scores that compare you against other people in your industry. So let me give you an example. Let's say I have a credit repair business and a trucking business, right? Well, the risk is different in both of these industries. So lenders might know that, the scores are typically lower on trucking industry because the industry is higher risk. I'm just making something up. So then they may want to see how you, if you're in the trucking industry, compare to other people in the industry. So that's what comparison scores are for. It's not for them just to see overall how you rate and score. Well, you might rate and score just based on your industry lower or higher than other industries, but then they want to see how you perform within your industry. Well, that's really tough if they have the wrong industry for you. So you've got to check these commercial credit reports. You got to know your NAICS code. You need to put that NAICS or industry code on all applications for credit and financing, knowing it will get to the bureaus, and then make sure that that's actually accurate so they can show your industry median, or basically how you rank against other people in the right industry that you're actually in. There's also a table explaining these different numbers. So 90 plus is paid as agreed. 80 to 89 is 1 to 30 days overdue. 60 to 79 is 31 to 60 days, and so on. So what we see here with Equifax is the same of Dun & Bradstreet and Experian as well, is that the credit score is just basically a reflection of how you pay. Okay, now this is what's called a performance score. So it's only looking at how you've performed in the past. No other data is calculated into it. And to get a good score, all you have to do, as you can see, is just pay as agreed. If you pay as agreed, you'll get a good score. If you start to pay accounts late, then that's exactly what creates the issue where your scores will be lower. So with the payment index, you just need to make sure that you're paying that payment as agreed. The credit report will also show what's called days beyond terms, and this is a line graph as well. It shows the average days beyond terms that you're paying bills, basically how many days beyond the time you're supposed to pay are you paying them late. Okay. And it's also for non-financial accounts only, but it shows recent trends. So if you've improved your payment habits, well, then that score will obviously be better. So again, days beyond terms, or what's called DBT, is very common on commercial credit reports. They all show this days beyond terms, and it gives lenders and credit issuers an idea of, on average, how you're paying your accounts. How are you paying them late? And if so, how many days beyond the terms you're supposed to pay are you actually paying? There's also a business failure score, and a business failure score ranges from 1,000 to 1,880. It shows key factors like recent balance information on there as well. And the business failure score is offered by Equifax, Experian, DB. So what you're learning here is that each of the credit bureaus really has about 5 main scores, and they're all very similar in how they're calculated. So we look at what's called performance scores, how you've performed in the past. And that has to do with, for example, DMB's PAYDEX score or DMB's rating. Okay, and this is then we have we have basically predictive scores that predict what might happen in the future. The business failure score is a predictive score. It's predicting your likelihood of going bankrupt, closing your doors, ceasing operation in the next 12 months. So you want to have the best score you can have because it shows that you're lower risk. And this takes into account payment data from suppliers, from the ones that count in that 30 accounts, as well as financial data they have, such as how many employees you have, or tax return or profit revenue data if they have that. Inquiries will also show on your credit report. They do not calculate into your score. DMB, Equifax, Experian inquiries do not calculate into your score. And the reason for that is because you can't control that. Anybody can access your business credit reports. So you can't have your scores lowered because they're doing so when anybody can access those credit reports without your permission. So inquiries will show on credit reports. Most cases, they're not going to show the source that pulled them. They'll just show, hey, inquiries in the last 30 days, inquiries the month before, et cetera. And you can see a number, but again, they're not going to calculate your overall score. And bureau messages as well. So this is basically a form field that has any notes that you apply to the profile and notes that they also have. There can also be notes on locations, aliases, incorrect information. So anytime you submit a statement to the credit bureaus, this is the section that will go. And there's also bureau summary data. So the number of financial and non-financial accounts you have, the date the credit became active, the number of charge-offs, the total dollars past due. That's all going to show in a summary section on your Equifax credit reports as well. Okay, it also shows most of your status in the last 24 days. How late were you over the last 24 months? Okay, your single highest credit extended, what the highest limit of credit account you have has been given. And the reason that's important is that in the consumer and commercial credit space, most credit providers will mimic that number. So if the highest credit limit you've ever been given is 10 grand and your credit's good and you go get another credit card, they're probably going to approve you for 10, 11, 12,000, an amount pretty close to whatever your single highest credit extended is. So the key is, if you want to get higher limits on credit cards, you need to use the credit cards you have. When they see you're using them, then other future providers or credit issuers will give you higher limits, and then the limits will get higher and higher as long as you continue to use that credit. If you're not using the credit, it's going to be really hard to be able to get higher limits. You also in this section see total credit exposure, how much credit you have outstanding that's available, the median balance on your credit, the average open balance on the accounts that you have as well. It also shows recent activity, which includes a number of accounts delinquent, number of new accounts opened, inquiries, and accounts updated. All of that information is going to show in that summary data on an Equifax report. Then we also look at public records, bankruptcies, judgments, whether judgments are satisfied or not, liens, lawsuits are in here as well. We're not used to that. In the consumer world, if we get sued, it doesn't show on our credit report. In the commercial world, if you're suing somebody else or you're getting sued, it will show in the public records section of your credit report. So something to think about before you get started with any kind of lawsuit is that everybody that accesses your commercial credit report will see that that's the case. It also includes information on the number of public records, the dollar amount, the most recent date filed. If there's none reported, then the date filed will indicate as much that they don't know that information. But it's also going to give all that specific data regarding actual public records. The final section appears to have miscellaneous information, probably doesn't fit well anywhere else. Okay, and that's alternative company names and DBAs, for example, or aliases. All that will appear in the additional information section. It also contains owner and guarantor names, business and guarantor comments, report details, the date the report was generated, all those kind of things are just in this additional information section of the Equifax credit report. So if you want to improve your credit report, well, then there's a lot of things you can do. You want to avoid public records. Obviously, anything like that, that's a negative judgments, liens, bankruptcies, any of that kind of stuff that you can avoid, you want to avoid. Okay, you also want to manage your credit responsibly, your usage. Try to keep your utilization down. It doesn't really calculate into your Equifax scores, but lenders and credit issuers can see that. And if you start maxing out credit cards, then it's tough to get future credit cards. And how you handle your financial and non-financial accounts. They're treated in different buckets. How financial accounts are looked at, how non-financial accounts are looked at, but how you manage those ultimately is the most important thing to manage your Equifax credit report and score, because that's what's going to give you higher scores, make you lower risk, and help you get more money at better terms. Okay. You also want to clear any debts as quickly as possible and not let them go delinquent. You want to keep your credit utilization within reason, as it makes sense to pay your bills early as you can, and avoid late payments at all costs. It's the number one thing that will really crash all of your Equifax scores. So you got to pay those accounts on time or early. Remember, this is not the consumer world. If you're 1 day late, you will actually be counted as 1 day late with the business credit reporting agencies. So you need to make sure that you never go late. As a matter of fact, you get credit and better scores by paying early. So whatever improves your Equifax reports, bound to report, improve your reports with D&B and Experian as well. So make sure you do this with all of your accounts. It's going to give you the best scores with all three reporting agencies. Let's talk about disputing Equifax. Okay, they're not going to typically change your scores without some kind of proof. So they will start to accept online disputes through their credit monitoring platform. And you want to include any proof of the disputes that you have validating what you're saying. Now, I've done it both ways. I've disputed and we've helped clients dispute through Equifax with no proof, no validation of the dispute of what we're saying is the case, and they've removed it. And we've sent proof in other cases and they've removed it or fixed it as well. You need to keep in mind with disputing, in my experience, they're just going to remove the account. They're not going to fix it. So what I mean by that is that if I come to an account that says that I was late one time in the last 30 days, right, and I've got 3 years worth of positive history, you have to really think about it before you dispute that. Because historically what I've seen is if you dispute and say, oh, I was never late that month, they just remove the entire account. Then you lost 3 years worth of positive history because you were disputing 1 month. And then people ask me, how do I get it back? You don't get it back. Once they remove it, it's typically going to be permanently removed. So fixing credit report also means that you need to spell out any charges or that you challenge or anything that you're challenging. You've got to specifically say what's possible. You've got to make your dispute crystal clear. A lot of times this is done by computers. You can mail the dispute. You can fax a dispute. You can dispute online. Equifax.com/small-business-FAQs. You can look at the dispute part of the FAQs and they'll go through the specifics of how to dispute with Equifax. So Equifax gets your data from a lot of different places. It includes a lot of different scores and information on your reports, including recent trends of what you've been doing, your histories of how you pay your bills, your balances, your utilization, all those kind of things. So you want to be able to monitor this regularly. And then what you also want to do is correct any inaccuracies as they come up. You can go to creditsuite.com/monitoring to get the cheapest monitoring. It's $24 a month with Equifax, Experian, and Dun & Bradstreet. They're $250. If you go to the bureaus direct, it's $24. If you go to creditsuite.com/monitoring and give us a call, we'll get your reports for free. We'll help you get Equifax, D&B, and Experian reports for free. We'll go through those reports with you during a consultation, give you tips and tactics to improve your business credit. We'll qualify you for funding. We'll talk about fundability issues that are going to be an issue that you need to fix so you can get the most money at the best terms. All that happens on a consultation. You can give us a call, 877-600-2487, 877-600-2487, or email info@creditsuite.com. You can also schedule your consult online at creditsuite.com/consult. And then if you got value from this training, hit the like button, hit the love button, hit the share button. I appreciate it. Make sure you like and subscribe on our channels. If you subscribe on YouTube, click the little bell and then select all to get notified when we go live. And keep in mind, Tuesday and Thursday at 1, 11 o'clock on Wednesday, we go live on LinkedIn, on YouTube, and on Facebook as well. You can access our channels for those trainings, engage, put comments, like you're seeing others do here and on all of our streams. You can also access daily tips on Instagram, Twitter, and Facebook. At the top right of our page, creditsuite.com, you can access all of our social channels. And we have a great podcast called the Business Credit Finance School. We have all kinds of experts that come on to teach you how to start and grow a business. We just had a digital marketing expert from London come on, and actually I just finished the interview with her. She was really good talking about the trends that are coming up on social media, where you need to be, what platforms you need to be doing, the new bringing in of audio in places like Clubhouse and stuff like that, and the social platforms. That's the kind of stuff we discuss on our podcast. And you can get to our podcast, the Business Credit Finance Show, at the top right of our website as well, creditsuite.com. So thanks for tuning in. I look forward to seeing you on our next training. We're talking about more cool ways to get money to grow your business.